Welcome into the Bunker Information Center. Today, I just want to show you guys a quick update on Bitcoin. We do have a pretty large pump coming in here. What I would, to be honest, call this is potentially a bear market rally, but I'm also biased towards the bearish side. And, as someone who sold most of their ETH at like around 3,800, even some like 4,600. Those are the levels I'm watching for ETH. Hoping it doesn't get past that because I'm obviously trying to buy more at some point. But I do think we're headed into a time where we're going to see real goods inflate. And so when we see real goods inflate and people need money to buy food and gas, does that give them the expendable income to the discretionary income to then go and buy digital items that are kind of speculative? In my opinion, it does not make sense. But geopolitically, it might make sense because in terms of Bitcoin and crypto rallying, because there's so many problems in the world today. There's so many problems with each country. The corruption that has just run so deep in all these countries has now created a scenario where crypto, and specifically Bitcoin and Ethereum, could actually end up being a safe haven for people to go to because there's no country associated with it. That's the same thing with gold and silver. There's no country associated with it. And so, it's basically these platforms that have been created and can be used by anyone worldwide that has an internet connection. And so that kind of creates the possibility that people sort of start to innovate through these technologies and through these sources of value like gold and silver, Ethereum, and Bitcoin, where we see these countries now moving towards, Bitcoin mining. We have Iran, who obviously is kind of more terrorist, but they have started to get into Bitcoin mining. So, that's just one country. There are many more. So let's take a look at what we're seeing here on the charts. We are seeing a cross here. And this is what I wanted to highlight in terms of quickly the bearish case. We can look at the bullish case and sort of where we might end up here because we rallied up really quickly here. And so we'll see what happens. But we see a cross here. This is the first cross we've had on the weekly time frame for the SMAs. As you can see, these have been, ever since back here when the bull run sort of started, when they crossed, nothing has crossed. Okay. So none of these have crossed since then. Now, we do have the 20 SMA weekly crossing the 50 SMA weekly finally now. Here we almost had it. We used the 20 as support and we did not cross. What I've said before in the past is when we look at these SMAs, we want to accumulate when the SMAs are tight, okay, close together in this range, and we want to sell when they're wide. Okay, so we're very wide here when we sold. We're very wide here. Okay, very wide. Still not at a point where we're back in this accumulation cycle. As you can see, this has played out in past cycles. Okay, so I want to go through some of these past cycles here. And again, wide, right? We were wide here. But look what happened when we first had this cross 20 over the 50. Okay, we rallied into the 50. And right now, we rallied past these moving averages. But what we'd want to see is holding of support. And I'll also get into the daily SMA moving averages for Bitcoin just so we can look at that as well and where we're looking at for that. But we had this cross here, we rallied up and then we dumped. Okay. So this just shows that this is an important cross. Not enough people are probably talking about it. Most people use the SMA daily moving averages. So just keep this in mind. It's just something I caught on the charts. And then we can go back to, again, the 2013 cycle here. Okay. What do we see? We saw wide, right? We saw a cross, and then we saw the dump. Okay. So these are just 3 examples of this. I'm not saying that, obviously, none of what I say is financial advice, but, I'm not saying anyone should buy or sell here. We can even look at another time here in March 2020 where we had this cross as well. Okay, so we crossed and then we had this massive dump here. And we actually had a rally going into the cross as well. Okay. So just be careful. I think there's a lot of people who are jumping off super bullish right now because of the daily chart. And again, we did just have this cross, and that has not happened in a long time, again, since March 2020. So keep that in mind. Yeah, so let's look at the daily here real quick. And what we can see is that we're coming into very strong resistance here. This is the 200 SMA daily. And what I would say with the daily moving averages is that I think more and more Bitcoin is trading based on these, just because, we have more institutional players who are in the game. And some people think this is like a good thing. In this case, they are probably trading a little bit based off of these daily moving averages, since they kind of move, year by year. So obviously a 200, SMA is, basically a little bit more than half of a year. So it's something that they might look at. Another thing about institutional investing is that, one thing we can look at here, if I can just pull up real quick a zero hedge article for you guys. Let's just see if I can even get to it, because there's just, well, Jim Cramer thinks the bear market is over, so we know that means it's not. We do the opposite of everything that Jim Cramer says. And so, you guys can look at zero hedge, but what I would say is that just the economy is in disarray. So if you think that means that crypto will be in disarray, that's something that you can sort of figure out on your own. Because like what I said was, Goldman obviously saying this rally is nothing but a bear market squeeze. Usually you want to do the opposite of what Goldman Sachs says. So there could be like a multi-month rally here, something like that. I do think it's still possible. Here we go. So this is just someone from a hedge fund, Neva Capital. Why we've never felt more bearish in 25 years. U.S. stock market is more overvalued than it's ever been. Debt level around the world is highest it's ever been. Central banks' expansive monetary policies have failed to see the imbalance developed, and overconfident on the strength of the financial system. Banks are stronger, but this time the lending spree is occurring elsewhere, less regulated entities. And that's kind of where I wanted to highlight, because we don't know where the leverage is at. Okay. So there is a ton of leverage in this system. And, it's kind of hard to know where it's going to show up. I do think that eventually it will show up in crypto in a pretty big way, because I think what will happen in this market over the next year is that, even maybe 2 years, is that we will see real estate fall because interest rates are going up, and people have already sort of exhausted the demand for real estate. So a lot of people have gone and bought multiple homes. As they do this, they are taking on leverage. And so that leverage gets margin called when interest rates go up and your margin levels go down. So you have to sell something. You might sell a house, and then all of a sudden you look down the street, someone else is selling their house, and then you feel the pressure to sell yours. And then it's kind of this cascading event where values just plummet. And right now, I feel like we're in this topping phase where there is this like mad rush to grab land, mad rush to grab assets and things that are real, like real estate, right? So I do think real estate will be the last thing to crash, probably take like a year or two, maybe 3 years. But for me, that's what I'm waiting for. And I'm sitting here in mostly gold and silver with obviously some staked ETH. And I am going to use those things to buy a homestead where I can have more farmland somewhere out in the country. So this is just my personal strategy. You should create your own. Obviously, none of what I say is financial advice. But the point is that when people get margin called on these assets, what do they sell? They sell the most speculative asset that they have and the most liquid assets that they have. Okay, so that's going to be gold and silver. We obviously can see Ethereum real quick. Sorry, that's going to be gold, silver, and crypto probably in that liquidity crisis. But like I said, there's going to be a rush to real physical things. So I think that there's more of a case for people selling Ethereum, selling their Bitcoin in this liquidity crisis that will probably play out at some point this year. I think within the next couple months. So we do see this level here at about 3,500 for Ethereum. That's a level to watch for sure. And Ethereum, again, on the weekly, we have not had this cross yet. We can look back and see there wasn't really the data here that I saw, but we did rally up to this level, which we're kind of doing right now. And, we're kind of going past it here, which is usually a bullish sign. I mean, we can see that for the most part, we stayed above this line for the entire bull market. And now we're sort of fighting this line again. So this is, the potential resistance here for sure. And, we'll see how it plays out. But overall, I think that it's important to be diversified in this market. It's important to not take on too much debt. It's important to, have physical assets, physical goods, storable foods, being self-sustainable. All of these things are going to help you through these sort of volatile times. You don't want to be like FOMOing into anything for sure. You want to have an even portfolio. So, like in the past couple of years, obviously I've been like, 100% crypto or more, even taking on leverage, things like that. That's not where you want to be right now in this market. You want to be someone that's being strategic, has a plan moving forward, and is, maybe has a 10% or 20%, allocation to crypto, something like that. I mean, obviously, if you're feeling a little bit riskier, I do think you can go higher than that. Obviously, none of this is financial advice, but as a younger person, if you want to take that risk, I do think that it's interesting in terms of the bullish case playing out for crypto, because, like I said, there's so many problems in all these countries that it almost makes me think like we actually, like Raoul Pal says, do have to make this crossover into this other world. I don't believe in really the metaverse, to be honest. I think that it's sort of a scam. I think that it's meant to sort of pump people's bags in terms of some of these tokens. I do think that there is a case to be made for these tokens being digital real estate, not because of the metaverse, but more because they're scarce items in a increasing digital world that we live in. And so if, countries are creating CBDCs, they're creating, digital, literal like digital tokens that they can use for real estate and to represent different assets that are going to be built on Ethereum. I think that Ethereum is something that you can stake. So that's great to have long term. It's so early still, so we really don't know. But that's the thing too, is that it's so speculative that to be 100% in right now in a potential bear market, I just don't think makes sense. Obviously, but I think that the asymmetric rewards are so large for crypto that it actually gives you an opportunity to have a smaller percentage in crypto, and then to sort of just hold on to that. Um, and so with that, I just want to say thanks for listening. Hopefully you guys got something out of the video, and have a great day.